Welcome back to the channel, and in this video, we're going to take a look at 3 high growth tech companies who are on a major dip as of late. And all 3 of these stocks have dropped at least 15% from the recent high, and this may be a great opportunity to buy some very strong companies with amazing fundamentals and a lot of future growth potential at a much more reasonable price. And these are the companies who are experiencing short-term fluctuations due to the crazy volatility in the market, and for all these names, nothing fundamental about their business has changed over the past month. And for each of the 3 stocks that we're going to discuss in this video, we're going to take a look at the company's short-term price movement, their current financial position, and their future expected growth over the next few years. And before we jump into that first company, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button and subscribe for the daily videos. And now we're going to jump straight in to the first stock that's on a major decline as of late, and that is Advanced Micro Devices, ticker AMD, and the company currently trades for $78 per share. They are a leader in the semiconductor industry, and the company currently trades with a market cap of over $95 billion. And from their high point back in early January 2021, where they reached over $97 per share, the company is now on a major decline of close to 20%, back down to the $78 level. And I think AMD is definitely one of the top companies on a massive decline that may be a great buy at this current level. And I think going forward, they will only continue to grow for many years in the future. And we can see the company projects that their total addressable market is at $79 billion, which is split up into 3 subsets in data center, PCs, and gaming. So this is a major market for them to attack over the next few years. And right now, they continue to expand their product line every single quarter. And just last week, AMD hosted another major event to announce the launch of their new mobile processor, which will be available on the market in late 2021. And if we now take a look at AMD's financials, we can see some very nice results. And on their income statement, total revenue continues to grow year over year, and it reached a high of over $9.7 billion in 2020. And over the past year, their total net income has absolutely exploded as well, and almost hit $2.5 billion in the trailing 12 months. And we can see a massive growth from $341 billion of income back in 2019 all the way up to close to $2.5 billion in 2020. And if we take a look at their balance sheet, they also are in a very strong financial position with total current assets of $6.1 billion in short-term debt coming in at only $2.4 billion. So right now, a very strong current ratio, well above 2, and absolutely no short-term risk coming from AMD. And overall, they have around $9 billion of total assets, a metric they continue to grow year over year as well, which is a very strong sign. And their total debt on the business is only at $3.1 billion, and they've done an amazing job of actually reducing their long-term debt each and every year, and now it sits at a very low and extremely reasonable $330 million, which is absolutely fantastic. And total equity on their balance sheet continues to grow and now sits at $5.8 billion, which is great for AMD investors. And for the next few years in the future, this company has no intentions of slowing down. And we can see in the full year 2021, they're projecting revenue growth of around 37% while maintaining a gross margin of 47% as well. And if we look farther in the future, over the long term, AMD is projecting annual revenue growth of around 20% per year and a gross margin greater than 50%. So if they can continue to grow revenue at 37% in 2021 and by 20% every year after over the next few years, I believe the company's share price will climb to record highs way above where they're sitting right now. And analysts are expecting big things from AMD as well, and for the next 5 years in the future, they're projecting over 26% per year share price growth. And at this current level, the company is considered a buy, and the current share price of $78 is well below the 12-month expectation of $102 per share. So AMD is definitely a top tech company that's on a major dip right now of 20% from the recent high, and I think they are now sitting at a very attractive level, and it may be a great time to buy the dip on AMD stock. And now if we continue on, we're going to jump straight in to the second company in this video, and that is NVIDIA, ticker NVDA. The company currently trades for $522, and they have a market cap at $318 billion. So of course, another big semiconductor company that's on a major decline as of late, and from their recent high back in mid-February 2021 of over $613, the company has now fallen close to 15% or $90 per share. And similar to AMD, the semiconductor space has a ton of future growth potential for many big names in the industry. And AMD currently operates in 4 main business segments, but 2 of them really generate a majority of the company's revenue, and those are gaming and data centers. And in the 2021 fiscal year, gaming generated 47% of the total revenue, and data centers generated 40% of their total sales. And these 2 segments have been growing at an amazing rate, and the 5-year CAGR for gaming is at 22%, and the data centers are growing at over 82% each and every year, which is absolutely spectacular. And the 2 smaller aspects of the business are professional visualization and automotive, which only make up respectively 6% and 3% of their total revenue, so very small aspects of their overall business, and they've also been growing at the slower rates compared to data centers and gaming. And we can see that in the latest quarter, NVIDIA performed extremely well, and total revenue was up 61% year over year. And over the past 5 years, NVIDIA has done an amazing job of growing the company's cash flows. And in the fiscal year of 2021, they generated close to $4.7 billion in free cash flow, which is very nice to see. And if we jump into their financial statements, total revenue continues to grow each and every year with a record high of $16.67 billion in 2020, with net income coming in at $4.3 billion. And if we take a look at their balance sheet, they have total current assets of over $16 billion with short-term debt of only 4. So right now they have a current ratio well above 3 and very sustainable over the short term, and their total assets sit at around $29 billion compared to long-term debt at only around 12, a very healthy balance sheet on NVIDIA at this current point in time. And over the next 5 years, another company with very high analyst projections of 25% per year growth, and they're currently considered a buy, coming in with a 2, and the current share price of $522 is once again well below the 12-month expectation of $638 per share. So NVIDIA, similar to AMD, is a high growth company on a 15% decline as of late, and now may be the time to start a position or add to your existing holdings in this big semiconductor player. And if you can't afford a $522 share, always take a look at AMD or the third company we're going to go over next, or also remember, with fractional trading that is offered on almost every brokerage on the market, you can buy into NVIDIA with as little as $1 and you'll just receive a fraction of a total share. So right now, in our current market environment, with all of these different platforms, the limitation to getting to companies is much lower because you can buy in with whatever dollar amount you want, and you're not forced to buy 1 or 2 full shares at any given point. And now if we continue on in the video and move into the third company that we're going to go over today, it's of course another big semiconductor player, and that is ticker TSM, Taiwan Semi, and the company currently trades for $114 per share. They have a current market cap of $540 billion, and this company does pay out a dividend with a yield of 1.57% and a trailing 12-month PE coming in right around 29. And this was the most recent addition I made to my personal financial freedom portfolio, which now sits at over $89,000. And in total, I've purchased 20 shares of TSM over the past month, and I have been buying the dip. And I think TSM is definitely one of the top semiconductor players to take a look at if you require a dividend to be part of your portfolio, which is one of my personal investing strategies. And from a high of $140, the company has now fallen close to 18%, back down to this $114 level. And at this current price, the company is considered undervalued according to Morningstar. They have an estimated fair value per share of $122, meaning TSM is actually trading at around a 6 to 7% discount at this current level. And this is a company that has been delivering incredible financial results to their investors every single year for the past few decades. And we can see that since they went public back in 1994, they've delivered an average revenue CAGR of 17.2% over the past 27 years, and their earnings have grown, averaging 16.7% as well over that same timeline, which is absolutely incredible. And going forward, from 2020 to 2025, they're projecting their total revenue to continue to grow between 10 and 15% per year, while maintaining a gross margin of 50%, and a return on equity will stay above 20% as well. And this company has been so strong financially that they have only relied on internally generated funds to finance their organic growth over the past 20 years. And since they started paying a dividend back in 2004, they have never reduced that payment to shareholders over the past 17 years. And if we take a look at their financials, each and every year, total revenue continues to grow at a massive rate, and it absolutely exploded in 2020. From $35.7 billion in 2019 all the way up to $47.6 billion in 2020. So they grew their total revenue by over $12 billion in one single year. And if we take a look at their bottom line, they are extremely profitable as well, generating over $18.4 billion of total net income over 2020, which is absolutely insane. And if we take a look at their balance sheet, all of these semiconductor companies have incredible financial positions. And right now, TSM has total current assets of $38.8 billion compared to short-term debt of only $22 billion. So a current ratio nicely above 1.5 and very safe. And overall, total assets of around $98 billion compared to total debt of only $32.3 billion. And TSM has reached a record high in regard to total equity, which now comes in at $65.8 billion. And they're the only company of the three that does pay out a dividend, and their current yield is at 1.57%. They only pay out around 44% of their net income, and that payment grows at an average of 13.6% every single year. And going forward, Wall Street is projecting around 25% growth each and every year from TSM, and the company is currently considered a buy, and their current share price of 114, like the others, is well below their 12-month expectation of $138 per share. So in this video, we took a look at TSM, AMD, and Nvidia. Three big names in the semiconductor space that are all on major dips as of late, from between 15% and 20% from the most recent highs, and I think right now may be a great opportunity to buy these companies. We took a look at their future growth projections. They all have incredible financial statements, and going forward, as technology continues to grow and develop, these semiconductor players and these chip makers are always going to be in need, and the growing demand for their products is only going to expand all across the world. So I like these three companies. I think in this space, it's great to go with the leaders because they already have the market share, they already have the capacity, and they already have the distribution. And going forward, they're still going to remain at the top because of how strong their current financial positions are. These are highly profitable businesses, and I really like these three names at the current prices that we saw them at today. So thank you for watching to the end. Please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So hit that like button, subscribe, and join the community, and I will see you in tomorrow's video.